Hey everybody, Dan Rawich here. So today and going forward, we're going to do a quick market update because I think that benefits everybody. And then we're going to go through our trades just to see how our system worked on, a pretty choppy so-so day. We did well. That's your spoiler alert. Not a lot of trades, but we did well. So first thing I want to talk about is GEX. GEX is gamma exposure. And this is just think about where the dealers have risk and they have to hedge. And typically, but not always, when you see GEX declining at these higher strike prices, that means the market is generally bearish. You don't want to see this, and you can see that the biggest exposure is right at the 410 level, and that's why the price just keeps getting drawn back to 410. I'm not sure where we close today, but we'll look in a minute. Probably darn near to 410, because that's where the dealer exposure is. Another thing on that same wavelength, this is you have to think opposite. So this is dealer buildup. So normally when you see this green, it would be good, right? It would mean people are buying calls and generally it's a bullish picture. But when it's the dealers or the market makers buying these things, that's not good. Why? Because dealers, market makers cannot take market risk. They're always going to be market neutral or what we call delta neutral. Now, again, if you're not experienced, this might sound a little bit like Greek, but so if I'm a dealer or a market maker and you want to buy puts, I'm going to sell you puts. I have to hedge that because if the market crashes down, could be a problem because I've sold a bunch of puts. So I'm going to hedge by actually buying the shares. So the dealer is always going to be doing the opposite of what the retail traders are doing. So, and you can just see when you see the green come up, the white line is the price. You can see the price lines coming down. When you see the dealers are hedging bearish, negative delta, then you can see that the index is going up. So right now they are hedging with positive delta, meaning they've sold a lot of negative delta out there. Okay, I know it's a little hard to understand, but the simple answer is this going up is not good, and it matches kind of what we're seeing with that gamma exposure. All right, the next tools that we use a lot. This is called the time cycle. There's your time cycle forecasts, and a gentleman named Steven Swanson developed this system. It's brilliant. I've never seen anything like it. I've been a member for many years now, but it's not something you probably have ever seen before. He came from outside the industry. And what he found is, I'll use this as an example, these different lines are different time frames. So this might be a 40-day time frame. So every 40 days, like clockwork, this is going to peak and trough over and over and over. And then the next line here, the kind of darkish mustard looking, that might be a 30-day line. I can't quite see what's going on here. I don't know if that's going to help or not. Yes, it does. No, it doesn't. So all of these lines represent a different time frame. And when you write down to the day, every day, these things peak and trough. It's not a question of timing. It's a question of what we call amplitude. How much are they going to move? And when you put all this together, you get the market. That's the market. And that's when you get this forecast. So with all this stuff put together is creating this predictive line going into the future. And you can see that this is price up here, and this is the same line up here. And you can see how almost perfectly the price always follows the lines. So this tells us that we're probably coming to the end of some selling, and we should be coming into a decent buying period. That's counter to seasonality. Seasonality right now is terrible. This is one of the worst times of the year to be long. Okay, so there's that. And if you look at this, you'll see that the magenta line, which is the intermediate term for the market, is going down, bearish. But the long term, which is white, is going up, bullish. And when these things cross, imagine, the ocean with a cross current, you get these gigantic waves. So you get chop. That's what's happening here. Now on the NASDAQ, suddenly you're seeing the magenta line is going, it's more sideways. Long term still going up. So this is not ready to rally. And also, even if it does rally, you're very close to the upper reversal zone because it can only go to 100. So that should make you a little bit cautious. The Dow should make you very cautious because this magenta line is going down, no doubt. And the S&P should make you very cautious. Again, the magenta line is coming down, but the long term's going up. What do you make of this? You make exactly what we've been seeing. Chop, chop, chop. Okay, the next thing that we love is we love the big money index. These guys at Map Signals are really smart guys. I can't say enough about their service. And you can see they have a feed to the biggest investors in the country. And this tells you when the big money is buying and selling. And you can see, but the blue shading is the market price and the gold is the BMI index. You can see when the BMI index heads down, the market's going to tank. And when the BMI index goes up, it's going to take the market with us. Right now, this is bending down. This is a pretty bearish picture. And my concern here is this is bending down, but the price went up. So you have a divergence here, a dangerous kind of divergence. And then if we scroll down here on the stock buys and sells, this literally tells you. So you can see the big money was very much on the sideline, no commitment, maybe a little bit longer than short. And then all of a sudden on April 25th, they started dumping. So 118 sells against 22 buys, then 86 sells against 17 buys. And then it started peaking. Now, when we see these big down histograms, that's very often calling the bottom. It's contrarian. So you notice how when all these peaked, the market started climbing again. So I actually see this potentially as a bullish sign. One more thing to stick in your hat and be confused about. So we got all these things pointing in all these different directions. And the net effect of that has been a very, very, very choppy market for a very long time. I'm just going to pull this up here. Go to the day chart. And you can see the market's really gone nowhere. This is May of 22. And you can even go further back if you want. But you can see from May of 22 to now, we've really gone literally nowhere. And every time we get around the 4150 level, which is up here, I can't see because my picture's in the way. Okay, now we're recording again. I think we're in pretty good shape. I'll turn the camera back on. Not that it really matters. Are you going to come on camera? No, fine. Okay. So this is the SPY index. I'm going to go to the 1 minute chart and we're going to talk about what happened today. So first of all, as always, you can see every one of our trades. If you don't have this link, ask for it. These trades post in near real time. And so I only had one trade today. Today's a teaching day for me. We have we do four live classes a week. So Tuesdays and Thursdays are super busy for me. But you can see I got in 11.53, got out 11.55, made $21 a contract, and we'll look at that in a minute. Lee had 6 wins and 1 loss. 1 win, buddy, I'm not really going to count it, but because he left this trade open last night on accident, and he won really big on it. But even without that big win, he had a very good day. So here's what that looked like for us. So there's my 1 and 0, $21 a contract. I trade 40 contracts most of the time. That's $840 profit. Lee had 5 wins, 1 loss for $1.24. That's $124 a contract. And he trades 20, so it's a $2,400 day for him. And just to be clear, we're talking about being able to do this with $3,600 in cash. I trust me, I know how ridiculous that sounds, but it's extremely real. And then we can look at our overall stats here. Sorry, it's a little slow. And you can see that yesterday we were 10 wins, 1 loss, and 90, almost 91% win rate, $61 a contract, which again, 40 contracts would be 2,400. Now this is a little misleading because it is a combination of the two of us. So you can divide that by two. He usually makes more than I do. Because he's really, really, really trading full time. I'm doing other things in terms of running the business and some other stuff I have. So I trade as much as I can, but I'm not glued to my screen. And you can see over the last 7 days, 53 wins, 7 losses, almost a 90% win rate, $502 of profit for the week. 20 contracts is $10,000 for the week. And again, 20 contracts only cost about $3,600. And then the 30-day mark also really good. But you can see we're trending up. We're getting better. And that's because we made some enhancements to the system that have been really effective. So let's look at the individual trades. I already have them marked for you. So this will go pretty fast. And I generally don't love reviewing his trades, but he and I, the signals are so obvious. I can always tell you exactly when he's traded and what happened, because we pretty much take the same trades. So, oh no, what happened here? Hang on, let me see what I'm missing here. I feel like there's a couple of his are missing. Okay, so I'm not counting this one because you can't even show it on the same screen. He did have this loss from 659 to 706. It was a pretty decent loss. Oh, I see. I'm sorry. Way back here. Okay. So this is a trade he took. He went long. I have no argument with this trade. We had the buy signal here. Remember, we're looking to clear the dot. And when there's no dot, we have to clear the next highest wick. And that's pretty simple. If you just look backwards a little bit, you can see where these wicks went up. So that means even though you got a buy signal, we have to clear these wicks. This is how we screen out false signals. And then we need to see a pretty meaningful drop here. This is the chop index. So as far as I'm concerned, this was about as good of an entry as you can have. That's why I wanted to show it to you.